So yeah, I think we can start now, guys.
Yeah,
It's
yeah.
been 5 minutes. So yeah, please take over, Matt.
Cool. Well, so we've just kind of started this series, so we're kind of trying to get our feet under ourselves a little bit on how best to kind of run things here. But um, I'll introduce myself again. My name's Matt Silver. Are we? Yeah, we are recording this. So my name is Matt Silver. I am one of the partners of Sweps. I'm generally the guy behind the scenes, handling all the tech stuff. Everything has kind of been developed by me and my team. And Frank here is one of our loan originator partners, and is also a beast at sales. And so we've started this series to educate everyone, answer questions. We want, really, at the end of the day, the whole idea is like, we want everyone to level up. We want everyone to succeed. We want everyone to be like raving fans of us, and all make money together. So to that end, this was something we felt like would help you guys to get the best out of the MLO closed system. So I think I do have a presentation, and I don't know exactly how long. It's not too long, but I think we can start by going through that, and then I can do a little bit of Q&A, and then we can get also into answering some of the questions that were posed in the survey that you guys filled out. Sound good? So let me, says you're sharing, or I can't share.
Benjamin may have to give you permission to share.
Yeah, try again.
All right. Yeah, there we go. Where is my Google Chrome? There we go. All right. You guys see my screen okay?
Yes.
Perfect. All right. So let's talk about Facebook ads. We're going to talk about demystifying your campaigns, because obviously everyone here has heard of, running Facebook ads, but they don't necessarily understand what goes on behind the scenes, and what we're kind of dealing with to try and get campaigns to perform for you guys. So first, let's start off with like, how are we in the mortgage industry categorized? So since the fallout of Cambridge Analytica, the lawsuit and the settlement March 18th, 2019, that was brought against them by the fair housing groups, mortgage ads now fall under what we call the special ads category. And the special ads category was formed by Facebook, and it's exclusively for credit, employment, housing, social issues, elections, and politics. So like all those trigger sensitive issues that they've gotten in trouble for are now under this special ads category. So what does that mean? How does this limit us? Well, it does limit our targeting options. They're limited, or they're completely unavailable under the special ad audience. And these things include age, gender, zip code, exclusion targeting, lookalike audiences, and saved audiences. So all those, wow, we're getting a little storm here. All those sensitive things that fall under fair housing, we cannot target anymore. And some interests are also unavailable when we create your audience. So audiences based on a city or a pin drop location will include an expanded radius of at least 15 miles, okay? So that's something to take into consideration when, for me, if someone wanted to target St. Paul, I drop that pin, it's gonna cover a lot of Minneapolis as well. And the opposite is true if I was targeting Minneapolis. So a lot of cities are kind of, spread into different areas, and they are gonna, when we drop a pin or when we target the city, it is gonna have this expanded radius of 15 miles. So to help you reach the people that are interested in your ad, we create this special ad audience, and it will let us create an audience based on the similarities in the online behavior and activity without using the certain personal attributes, including that age, gender, zip code, and that kind of thing. So really, essentially what's happening is Facebook still has all that data, right? They have access to it. They just limit what we can target, what we can see. But they have that, and that becomes more important a little bit down the line. I'll show you what I'm talking about. One of the things that we do is we aggregate our data using our Facebook pixel. So that's one of the advantages of working with a company that that exclusively works in a certain niche, like we do with mortgage, because all of the data we combine, all of this anonymous data that Facebook is collecting, we across all the accounts, and it gives us the best opportunity for your campaigns to perform better and more quickly than similar campaigns that don't have this data to leverage. Does that make sense? So the other thing we do is we always split test open and interest-based targeting. So we can layer on interests, like people that like Ferraris or Lamborghinis or Mercedes, BMW, that kind of thing, or country clubs and tennis clubs or golf or all these kinds of things. We can layer those in, but what we're finding is Facebook wants a really broad, large audience. They don't want you to restrict it. So their targeting options, like all audience selections tools in Facebook, they always have to be inclusive and not discriminatory. And they like this broad, big audience because that's the most data that they have. And then it makes it easier for them to help us find the pockets of people that are responsive. So how the Facebook algorithm works, well, the spoiler is that we have no idea. We have some kinds of things that we figure out, but generally it's a minefield. It's an ever-changing target. Google is the same way. They're always updating it. Literally thousands of times a year, things get updated, little incremental changes, and we just have to go along with the flow. But what we do know is that when we target, say, a population of 150,000, that Facebook will pick a segment of that audience to show your ad to. So sometimes we can strike gold, and sometimes we get this low-hanging fruit, and then the campaign dies and peters out. Other times we have to relaunch several times in order to find those good pockets. And sometimes none of it works, and it's just a struggle all the way through. There really isn't a real rhyme or reason. We're using the same kinds of ads. We're using all these battle-tested things that we know works, sometimes even in the same market, but for a new client, it just doesn't. So it's sometimes a little bit of a mystery. And what we can do then is, zig and zag a little bit, change our geographic targeting a little bit, and that could dramatically change the results, or even change our budget. Because it is a auction, and these changing even the budget by $1 or $2, we can spring us back into the mix where we weren't before. The other thing that's happened fairly recently is how many of you guys are Apple users? I know I am. I'm attached to my iPhone. No, good. Okay, well, so being an Apple user is like dating the devil a little bit. It's like buying your leads from Zillow. For a consumer, it's great. Privacy is paramount for them. For us as marketers, it's working against us, right? So they announced these changes in iOS 14 and now 15 that impact how we're receiving our process conversion events. And so the reporting and everything has been affected and is really hard with retargeting with all of it. So as more people are opting out, the ads and personalization performance reporting is limited for the web conversion events. And this is not going to get better. It's going to get worse. Samsung has already announced they're doing the same thing as Apple. Google has already announced at the end of Q4 they are going to remove tracking of third-party pixels, third-party cookies, which is everything that we use to track people on and off of Facebook. So it's the cat and mouse. I mean, this is how the internet is for marketing. So in response to these changes, we set up our conversion events. I know I'm going a little deep, guys, but hopefully I don't lose everyone. And I want to open this up to questions afterwards, but this is a little bit more of the tech side of stuff. We set up these conversion events through what's called an API, and that allows us to measure things a little bit better. It's this aggregated event measurement. And then we do what's called these UTM, or urchin tracking modules. And it's a little bit of code that ends up at the end of a URL. Sometimes you see all these numbers and things at the end of like a web link. And those allow us to track it back into the CRM system. So this gives us these additional insights and allows us to measure what's happening and give us the direction on what's not working and how we can fix it. But all that said, it is admittedly an imperfect solution. It doesn't always report properly. It's currently requiring me and my team to do this manual audit to try and determine not only the cost per lead, that's CPL, but also to determine what ad creative, copy, and headlines are actually converting. So we're, putting on those detective hats. And so I want you guys to know that while it may seem like calm on the surface, there's actually a lot of stuff going on under the water that to try to get these things to perform if they're not. So we'll split test the creative. With the ad itself, it'll be the creative, which is the images, the grid patterns and house styles, colors, graphics, and the headlines, which is that call to action. And then we have the body copy, which is calling out the target audience and giving them the offer. Then we're going to test the targeting, which is open, wide open, no interest, and then testing different variations of interest. And then the geographic, whether we're going cities or counties or the full state or dropping a pin in a location. And then we also, the one thing we can do with targeting is if you're able to run in Spanish and you speak Spanish, we can run targeting a certain language. So it's kind of weird that we can't discriminate, but we can say that we only want to go after Spanish people. So don't know why that is allowed, but great, good for us. At the end of the day, here's the goal. Okay. And this is what we need to keep in mind. Really important. Okay. The goal with your Facebook ads is to get your brand out into your community, help you find those marketing qualified leads that will become clients or referral sources for your business. Okay. So we are looking for marketing qualified leads that will become clients or referral sources for your business. So Facebook is great for getting more leads cheaply. And it's great for building up your database fast. But the con is that there is a super long sales cycle because these leads are usually not high intent based, especially if we're going after a cold audience, right? These are the people that are sitting on their couch, scrolling through Facebook with a bag of chips, and they stumble across your ad. And they're like, oh, yeah, I wonder what I could qualify for. Oh, I was thinking about buying a house. They are not the high end, they're not the people going to Google doing a search. And those also are a great conversation for another day. They're great in their own way, but they cost, right? There is an opportunity cost to those great leads. About 3 or 4 times as much cost, easy. So if a lead isn't ready to qualify or buy now, it doesn't mean it's not a good lead. It is a good lead, but they just aren't qualified or ready right now. So it's about leveraging them. Can they be pawned off on, credit repair person? Is there other ways that you can help them? And at the end, you're always asking them for a referral. Is there anyone else I can help? Do you know anyone else looking to buy a house right now? You never know. Their boss, their coworker, their friend, their family. There's people know people. And if you help them out and show that good faith, it's almost like the Hare Krishnas at the airport that used to hand out the flower and then ask for something back. You giving out information is your flower. And then you have that opportunity to ask something back. So the average closing rate from online leads across the industry is a 2 to 3%. So online leads tend to be on a longer time scale and average out at 1 to 3% over a minimum of a 3 to 6 month period. So this is just something to keep in mind. We are going to look at building your overall book of business through the lead generation and through the other things that we're doing with retargeting, with database reactivation, with helping you with realtor referrals, with all that kind of stuff. This is how we're going to build your business, but it's not going to happen overnight. Okay. Almost done, guys. The Facebook ads goal, again, LOs have closing rates, leads do not. So the most we can try to do is generate as many leads as possible at the lowest cost, qualify them as quickly as possible, implement follow-up and a long-term drip systems, and book as many of them into appointments as we can. And that is exactly what our MLO close system is doing for you guys, okay? So the reality is for every 100 legit marketing qualified leads, you can expect to close 1 to 3 additional loans per month, starting in the 3rd to 6th month. And it's pending you have a follow-up scheme in place that goes for at least 1 year. Now, there are outliers. There are plenty of people that hit the home run. It happens, but we just need to be clear with like, those are the outliers. Those are what we're going for, but this is what we really realistically should be expecting, okay? So the good news though, is that all of this, like you saw probably in your demo call with Josh or Jonathan, is that there is a compound effect. This will grow as your pipeline grows, as we're nurturing people along, as you're dealing with more realtors and just more people in general, you're going to get more business. Your pipeline is full. More clients are going to refer you to more real estate agents. More you're going to be seeing online. The more you're on top of mind in the consistent follow-up, the more deals you're ultimately going to close and the more money you're going to make. So this is really the number one thing that top producers have figured out and why they win. They've been in it for a long time. They've built up their database. They nurture them. They give goodwill. They help them out. And then these people come back to them. And that's why it's always seeming like, oh, why are they doing so well? Well, this is exactly why. And now we can do the same thing for you. Okay. So that's it, guys. That's the presentation. I hope that like helps clarify some things and demystify a little bit of what's going on behind the scenes here. I know I blasted you guys with a lot of information. Do you guys have any questions that I can answer? No? Covered it all? That's all right. Me and my team are here for you guys. If there are ever any questions or you need clarification, feel free to reach out to Benjamin or anyone on the team, and we'll make sure that we get those answered for you. So with that, I'm going to stop sharing my screen here and hand the mic over to Mr. Frank Cohen.
How you guys doing today? I am in Las Vegas, so excuse my my horrific background. I chose a hotel this time. I'm in the Rio because I'm playing in the World Series of Poker, and the Rio is actually a horrendous hotel, and I'll never stay here ever. It's horrible. What?
Jaw drop. I was gonna have you put $20 on red for me, but now that I know you're poker champion. What?
Yeah, I know, right? I actually came out here for a marijuana convention because I have a marijuana license in Illinois. So just meeting with some of my partners out here in Vegas. But this is important to me. So I want to make sure that I try to make these things because rising tide lifts all sails. So that's why I come. So I want to answer some of the questions that were presented on the questionnaire that Swept sent out. So one of the questions was motivation, time management for 100+ leads per month, and then when to rely on automated versus actually calling. So the first thing I say is if you're getting 100+ leads per month, that's probably something you'll be able to sustain for about a month if you're doing it yourself. So if you're getting 100+ leads per month, you need to for sure have the ISA. And I didn't realize the value of the ISA until I recently upgraded to it, and they are absolutely amazing. They bang out these phones and they send you these leads in real time, and people are on the phone and they call them like literally 3 to 4 times a day. And I'll get people that call me back and say, hey, and I didn't understand it at first. They're like, hey, the name will pop up on the phone. Hey, I got a missed call from this, and I know the phone number is coming from Sweps. And I'm like, oh, just roll right into your spiel. Hey, this is Frank. I'm calling to about your questionnaire that you filled out about having a free mortgage consultation. And you just jump right into your pitch, and then some people are going to hang up on you like, oh, click, and then some people are going to entertain you. But that's how you jump into it. So if you're getting that many leads per month, which is absolutely amazing, if you don't have it already, then ISA. And then when to actually call versus automated. So after the client has responded, you probably for sure need to contact them if the ISA hasn't contacted them already. Because the only other time I call right away now is if I look at the lead and it's an amazing lead, like 200,000 to 300,000, credit score sounds great, income is great. Those are the times I call like absolutely right away. But now since the ISA has kicked in, they handle a lot of that follow-up and is absolutely amazing. Another question someone had was how to get them to talk to you. So the way you get them to talk to you is to keep calling and provide information that not you, but provide information that the client thinks is relevant or valuable, because what you think is relevant or valuable may not be relevant or valuable to them. And if they don't see the value in what you're saying, then they're not going to give you too much more of their time. To give you an example, I had just recently, last week, a phone call came in and the number was saved in my phone because it was somebody from Sweps. When I save them in my cell phone, I save them as, Frank Cowan, parentheses, Sweps. So I know where the lead came from or where I know them from. If I got them from a realtor, it'll say Frank Cowan, and the realtor's name in parentheses. So I always know who's calling me and who to reference when the transaction progresses. So it was a lead that called me from July and it said, Cecilia Ross Sweps. And I answered the phone. I'm like, man, I don't remember this name. She's calling me from July. And she's like, hey, Frank, I just want to tell you, I took your advice. I got my credit repaired. And then as she's talking, I'm like, oh, yeah, you, Cecilia, 4 months ago, 3 months ago, this lady remembered me because the information that I provided her was relevant and valuable to her. And then the last question that someone had is actually the first question, but I left it as last because I think we can all build on this in some way. How to convert leads to applications and how to combat a lead that requests info, then wants out of emails and acts like they didn't submit. So the first thing I'll say is, if someone is requesting information and they're talking to you, I didn't write down who submitted this question, but if they're talking to you and then they want out of the marketing, it's because the information that you provided was invaluable to them. So you need to, if someone says that to you, that means you need to rehone your pitch and what information that you're coming across, because somebody just gave you constructive criticism without giving you constructive criticism. They told you without saying these exact words, the information that you provided, I'm not interested in. So, which means you're providing that same information to other people, and then you're just not getting that constructive criticism back from someone else and wondering why people aren't returning your phone calls and you aren't converting application or leads to applications. So we all have to look back at ourselves and say, is my pitch working? So what I wanted to do was like, let's role play converting people from a lead to an application. So anybody volunteer, and I'll be, the loan officer and you be the client, and let's role play on what kind of phone calls that you've gotten that seem a little difficult. And I don't have all the answers, and I want all of us, if we can, to participate to figure out how we can overcome some of these objections together. Because you might stump me. I'm going to do my best, but you might stump me. So let's role play and say, who's going to be my volunteer Sweps lead. Come on, guys. We all want to get better together. So let's role play together.
I'll do it.
All right, let's go, Tara. Perfect. Is it Tara or Tara?
Tara.
Okay, Tara.
Just like
ring, ring, ring. Perfect. You answer the phone. So
hello.
Hi, Tara. My name is Frank. I'm calling from Nexa Mortgage, and I'm following up with you about a recent inquiry that you had to have a free mortgage consultation. So you're in the market for a mortgage, correct?
I am. And who are you calling with?
I'm with Nexa Mortgage, and you filled out my Facebook ad. I have a Facebook ad specifically targeted for people that are looking for mortgages, and you completed the survey. You said, you're looking for a house in 2 to 5 months, and you talked about some things, and I want to ask you, how much information that you have about the mortgage industry so I can provide you that information so we're making educated decisions together. Do you have a couple minutes to talk?
I do. I'm a little short on time, but I think I have a few minutes.
Perfect. That's all I need is a few minutes. And if I can't answer as many of your questions in the next few minutes, then we can pick it up another time. Is that okay?
Yes, sir.
Okay, perfect. So you always ask for permission, because when they give you permission, they're giving you their time. All right, Tara. So how much have you ever purchased a home before, or are you a first-time homeowner?
I would be a first-time homeowner, first one in my family.
Perfect. I love dealing with first-time homeowners because I love educating you guys on how to purchase a home. So typically, first-time homeowners, there's 2 programs that we typically use for first-time homeowners. One is called FHA and one is conventional. Have you ever heard of these?
Briefly, heard a little bit about them through some other ads and stuff online, but nothing, don't have all the details.
Okay, perfect. So I'm going to give you a little bit of information, because what I like to do is I like to educate people. So when you're going through this process, especially being a first-time homeowner, it can be daunting. It can be stressful. It can give you heightened anxiety. And I want to be the person to try to bring that anxiety level down and provide you good information. So the first way, like I said, to purchase a home typically is FHA. And FHA is good for first-time homeowners because it requires a smaller down payment. It requires a minimum of 3.5% down, as long as your credit score is 580 or better. A lot of people, your realtor may tell you that, the seller likes conventional, and there's a reason that the seller likes conventional. And when you're on the other side, you may want a conventional purchaser as well, because the appraisal process is less stringent on conventional appraisals. Whereas if you're purchasing a house under FHA, they have more stringent appraisal process, and they're going to say if there's chipping paint that it has to be redone. If the stairs don't have rails, they're going to make them put rails in. If the windows don't have screens, they're going to make the owner put screens in. And so that's why some people have a little bit of apprehension about selling to a FHA person. But what I do is when I call that lender, and they also think that FHA people necessarily have challenged credit, and that's not the case. Your credit's great. You said your credit is somewhere between 620 and 700. So your credit's in a good range, but people don't realize that they have this preconceived notion that all FHA people have challenged credit and it's going to be a tough deal. And it doesn't have to be that way. The other way that you can purchase a home is conventional. So with a conventional mortgage, there are programs where you can get as little as 3% down for conventional, but the issue with that is it's more credit score driven. So the higher your credit score or the more income that you have, then the lower the down payment will be that's required. If you're not in a perfect situation, then they may require 5% or 10% down. So that's a way to do it. The other benefit of doing conventional is if you're going to have a bigger down payment, let's say you're going to put 20% down, it's more beneficial to go with conventional because you can alleviate the primary mortgage insurance. And what mortgage insurance is, when you put a lower down payment down, then there has to be insurance to guarantee the lender that they'll get paid in the event that you default. So if you do conventional and you put a certain amount of money down, you can alleviate that. And that fee could be somewhere between $50 and $200 a month, depending on the price range of your home, right? So, but the benefit of doing FHA, and I bounce back between these two, so let me know if you have any questions. The benefit of doing FHA is FHA loans actually have a lower interest rate. FHA loans right now, their interest rate somewhere between 2.7 and 3.2. Whereas if you go with a conventional loan, your interest rate is going to be somewhere between 3.3 and 3.8. All because FHA loans are government backed. So anything government backed, you're going to get a better deal. So that's those two. The other thing, let me tell you a little bit about the company that I work for. I work for a company called Nexa. We have, 115 different lenders. We have full spectrum lending. I'm always available. My phone is always on. If you notice, today is Sunday and we're on the phone, we're talking. My phone's on from 9 a.m. to 10 p.m. 7 days a week. I'm always available because I want to bring that anxiety level down, because I want you to have a good experience, and I want you to get your questions answered so they're not festering. Where you go to another, I'm a broker, so brokers are better in my opinion, because if you go to a traditional bank, they're going to be available Monday through Friday, and they're only going to be available from 9 a.m. to 5 p.m. And if you don't get them, you got to wait till tomorrow, and you hope that they call you back. If I miss your call, if I don't answer your calls for one of a few reasons, I'm either on the phone with another client, on the phone with a lender, or I'm doing something with my family, which I have to take some time out to do that. Otherwise, I won't keep a family. But that being said, do you have any questions for me?
Well, so.
I do a lot of the talking to
Yeah,
alleviate
you
questions.
do.
So if you notice, I try to, because most people don't know anything about the mortgage process. So
Yeah.
if I just bombard them with information that they haven't heard, and sometimes they've talked to another lender before, and they're like, man, that guy
Yeah.
didn't give me that much information. That guy, he didn't give me any information. So I learned so much more from you. I think I'm going to do business with you. And so
Yeah.
after that, once I say, hey, do you have any questions for me? If they ask a question, great. And if they don't, I'm like, okay, are you ready to proceed? And then most of the time they're like, yeah, perfect. You know what I need from you now? Shoot me your email. If I don't have their cell phone number or whatever, I'll text them from my cell phone or whatever and say, hey, shoot me your email address via text. I'm going to send you one of 3 emails. The first one's going to be access to a Dropbox folder. That's where I want you to put all your secure documents, because I'm going to pass that off to my processor. The next thing I'm going to send you is a list of things that I'm going to need from you to get you a pre-approval. It's going to be driver's license, bank statements, everything I'm going to need. It's going to be in the email. And the third thing I'm going to send you is the application link. So you're going to click on the link, fill out the application, and shoot it over to me. And that's how we get you pre-approved. But that's how, and I've had a lot of success with that pitch. And I know it's a lot of information to get in one session, but that's how I've converted a lot of people. So I've gotten these ISA people have been banging these phones. I got 5 applications gone in the last 7 days from just sweps, 5 applications. And I got one of them didn't, what was wrong with her? One was something was wrong with, I couldn't convert. 2, I'm still waiting to come back. 3, I'm working on, but it's all about getting over that hump of overcoming any objection or alleviating an objection before an objection even comes into play. So with that being said, I mean, that's pretty much what I have, unless you guys have some questions. I mean, it's pretty.
What did you say were the 3 emails that you did? Because that was actually a really good idea, because when I do it, sometimes I just put it all in one, but I like your 3 email idea. That was actually a really good idea that, I mean, I've thought of but not really thought of.
I do it this way. There's a reason. It's a method to my madness. The reason I break it up into 3 emails is because people have attention deficit disorder most of the time. Most people have ADD, and they can only do, you read so much at a time. So if I break it up, it's easy that's why people respond to text messages so quickly and don't answer the phone as fast, because a text message is a quick response, whereas a phone call can be 15, 20 minutes. So
Yeah.
the first email is just a link. So I create a Dropbox folder for them, and their driver's license, their bank statements, their check stubs, their social security cards. I tell them put all that stuff in the Dropbox folder because Dropbox is secure. So I create the folder for them, and then I share it with them. So I'm the host of the folder, and so they can't delete it on me, because we're going to need it for,
Exactly.
if we get audited or something down the road. So I keep that separate. They get that. And then the second email, I have a template, that I just copy and paste, and I say, hello, nice meeting you, whatever. It's going to be, I charge people up front to run their credit, especially because sometimes people can have shaky credit. So I make them pay, it's only $27 for me to run credit. I charge it to them. I send them the credit card authorization form, and then I send a list of things, and the list of things is going to say driver's license, last 2 years of bank statements, last 2 months of bank statements, last 2 years of W-2s. And it's just a list of things that I need to get them pre-approved, so I can verify their income, verify their assets, things like that. And then the third email is pretty much this. It's in the other 2 emails, because my application link is underneath my phone number, but I don't want to tell them too much in one email. So I have a separate email that says, hello, Tara, nice chatting with you. Please click on the application link below my phone number. Fill out everything except the liabilities portion, because the liabilities portion is going to automatically populate once I run your credit. So perfect, click on that. So I break it down, so I'm giving them snippets of information, so it's not information overload like I gave them on the phone. And there's a method to my madness for the information overload on the phone, because if I give them so much information that they feel like they understand the mortgage process, there's almost no way that they're going to tell me no. And there's one step that I missed with you guys, because it's just, I'm not in the mode of really a customer. I tell them, I'm like, hey, and then this is how the process is going to go, somewhere in there. I say, the first thing we're going to do is you're going to send me these things and I'm going to get you pre-approved. So, that's sort of a burden because you have to send me this information, but it's a short time frame. The next thing, hey, are you working with a realtor? And they're like, no. Perfect. Once I get you pre-approved, I have a stable of realtors that I work really well with, and I'm going to get you with one of them, and they're going to give you the education that you're going to need going forward for the real estate process. So I'm the numbers person, they're the shopping person. I say, you're going to have a lot of fun with them. You're going to have a lot of fun with them because shopping for homes, you're going to see the new and shiny doorknobs,
They're the fun guys.
yeah, they're the fun people. And then you're going to find a home, you're going to submit a contract. Once that contract is accepted by the seller, it's going to come back to me, and now that's when the real work happens. Okay, so it's going to get back to not being fun again, because I'm going to be contacting you, my processor is going to be contacting you 2 to 3 times to ask you for additional information to what you've provided, because the lender is going to be asking for this. And then once we get that, it's going to take somewhere between 21, it depends on who I'm working with. So I usually say somewhere between 30 and 45 days, unless it's like a rush file. But it's going to take between 30 and 45 days to get a clear to close. Once we get the clear to close, you go to the signing, you sign your documents, you get your keys, and it's all happy and fun and games. And hopefully I can get a referral out of you. And they understand the most about the process than they've ever understood before.
Awesome.
Yeah, that was really good.
Great stuff. Great stuff, man. Hey, Ross, I know you've been getting some leads in and that kind of stuff. I'm curious, while we're here with Frank, what kind of objections have you been encountering, or conversations have you been having with anyone?
Oh, well, when I get them on the phone, not really getting too many objections. It's just kind of cleaning off the bottom of I don't know, they're not very great right now. Most of them are very credit challenged with an income level that doesn't qualify them for even rent I'm in the Phoenix Valley, and everything is just becoming so much higher that these people just really don't qualify.
What kind of income level do they need to be at in your area, do you find? I'm in your account right now, if you don't mind. And I do see that there is a lot that are stating they earn less than 60,000 a year. So
yeah, and it is 60 plus, at this point, because the homes that they can find, are going to have, those HOA things that are just going to push it beyond the things that they're going to be able to afford even then. So it's just that, what was affordable before COVID for these people, it doesn't exist. So
right.
Or their expectation too of what they can afford, because that's
there's always a gap there, definitely.
Well, and that's what I run into similar. Like I have a handful of leads that came in that are credit challenging that, I can work with, because the company that we work with credit, we can repair that.
Right.
We also need to understand that they need to repair their credit. And that's a hard conversation for a lot of them, because they may think that their score is between a 620 to 680 for whatever reason. And then when I actually run it, boom, 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 they're at a 593. And I have to explain to them, like, okay, well, you got some work to do still.
Let me chime in on that, Tara. So I do somewhere in that conversation try to ask, I ask them if they're self-employed or W-2 employees, so I know what I'm working with. And I do ask, if you had to guess at a 3-digit number, what would you guess your credit score to be? And when they say, 650, the first thing I ask is, where'd you get it? How'd you come up with that number? If they tell me Credit Karma, I'm like, well, just so you know, different industries have different algorithms. The mortgage industry has one based on mortgages. Your car industry is going to have based on cars. Credit card company is going to have a different one. So each industry is going to have a different scoring, a different score. So don't be surprised if mine comes lower or higher. So if you address that in that very first conversation somewhere in there, then it alleviates some of that too. So I try to address it early.
Oh, for sure. That's definitely a conversation that's had, because especially on a handful of my leads, because the leads that I'm getting in are a little bit more lower credit, lower income, but want to be first-time home buyers. And then, of course, I don't know how familiar everybody else is with Atlanta, but when you're in Atlanta itself, where I am on the south side of Atlanta is much cheaper than if you go north of Atlanta. North of Atlanta, those homes are so much more expensive. And these people are like, oh, I want to buy a $400,000 to $500,000 home in Kennesaw. And I'm like, buddy, you barely qualify for $100,000 home anywhere.
Right.
Because you got some work to do. I mean, and that's what I try to explain them in my call. Like Frank was saying, like I try and make sure that I explain to them the credit process, that each industry does have their own thing. So yes, they may be checking it on Credit Karma. I do ask where they got their information from for their guesstimated score, and explain to them that it can vary and everything along those lines. Income, multiple income streams. What do you have? How long that you've had it? X, Y, and Z to try and cover all of it. Their expectations, that's the hard part, I think, that may be off-putting for some of the people like we're getting from those Facebook leads. Kind of like you said earlier, Matt, like the people that are scrolling through Facebook and clicking these leads aren't necessarily your top buyers, your go-getters, the ones that are, necessarily working their ass off.
It is just it's a numbers game. It very much so is a numbers game. And obviously, the pros in the first time home buyers is like we've been talking about. You get to educate them. They don't have any existing relationships, so it's easier to form that with them. The guys that have already bought a house, like me, I'm on my 5th house. Like I have all those relationships. Like there isn't as much need for me to go outside that.
Those guys are going to beat you up because they know the process.
Right.
Yeah, so they're going to call you out on everything that you do. They're like, all right, hey, I got one up on you.
Right. What I seem to hear across the board is like what you said, that credit score can be worked with. It can you can either get them into a program or they can get credit repair. The down payment tends to most people are going to say, oh, I want to put as little as possible. But that is also something that can be overcome because, if you have that program, like the rates are going to be better if they have something to put down, and they don't realize, oh, they can utilize, gifts and the 401ks and other options, and also just saving. Like if they have a specific goal and understand what they're working for or working towards, that is valuable in itself. So sometimes with these people, it is just helping them, taking just a small amount of time to help them at least put a plan in place. Be like, well, okay, you want a $300,000 house. You can only afford 150 right now. To do that, you are going to need to look at getting your income up to this level. And it's like, well, at least now they have that information. They know their target. They know what to shoot for. Maybe that's a second job. Maybe that's a promotion or moving to a different job, but they understand what they need to do to get to their goal. And
But I'll take it one step further. Instead of, I wouldn't necessarily put them off and say, hey, you get a promotion, because that's not as easy. That's not as easy to do as get to increase your income. But what you can do is you can start to build some equity in a starter home. So let's get you into a home that may be 100 or 150. You build some equity into that. Now it increases your down payment. You have the capacity to turn and burn instead of giving your money away in rent to someone. So that's how I alleviate people with if somebody
leverage what you have and where you're at.
And, so if they have these high expectations and then they come in, for me, if I get somebody with $2,500, $2,600 in income, I can put you in like $120,000, $130,000 home. No big deal. But I do ask about student loans, because a lot of first time buyers have student loan debt, and so I also talk about, I forgot this part. Also talk about the benefit of going FHA versus conventional, because FHA, they just changed the law. Now, if you have an FHA loan and you have $100,000 in student loan debt, you only have to calculate 0.5%, where it used to be 1%. But if you go conventional, you still have to calculate that full percent. So, I tell them, hey, you can have a better debt to income if we go FHA, because you're going to have a lower interest rate. You're going to have blah, 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 blah. So it's just, I'm constantly educating these guys, constantly, just drowning them in so much information. And I mean, if you have people that have high expectations, you know what your job is? Just step their expectation down a little bit. And I know it's easier said than done, but if you give them a dose of reality and be like, hey, but at least you can still own your own home.
And turn it into a positive. That's a huge thing, because turn it into, hey, you're building equity, because it may not be your dream home, but whose first home is their dream home?
Right.
Exactly.
Yep.
You don't come from,
exactly.
if you don't come
Well,
from wealth, your first home won't be your dream home.
Yeah.
There is so many, I think so many first-time buyers have, what we call the Cinderella complex, right? They want, it's like, finding the perfect guy with the knight in shining armor that you're going to live with for the rest of your life. And it's a wonderful idea, but it's like there are people that seem to feel like when I buy a house, it's got to be the end all be all, and that's it forever. And it's like,
Move-in ready.
us who have been around the block a few times, we understand. Like, no, I mean, I've grew up in lots of houses and I've owned lots of houses, and it's like I think people get locked into this real myopic view and blindered view of like, yeah, that's got to be the end all be all forever home, and it's like, no, it's a springboard to your future and what you want, and building that equity and all that kind of stuff.
And to give you an example about what you were saying about, or what we were saying about, we deal with a lot of first-time homeowners in this program, and for me, I like it better because just because they don't ask as many questions. I got a lead from a realtor, and this lady's buying her third or fourth investment property, and when I say this lady asked me everything, she's like, why do I have to bring so much money to closing? I'm like, it's the LE, I'm going to have inflated numbers. Yeah, but you got $7,000 on here. I'm like, okay. I was like, well, I'm waiting. I haven't gotten, in Illinois, we don't get the fee worksheet or the invoice from the title company right away. It takes like a week or two. So I'm like, as soon as I get that, she's like, yeah, I need to see that. So as soon as I get it, I send it over to her. I mean, and then when she's going down line you don't get that from first time homeowners.
Yeah.
And I'm not getting over on anybody, but it's just shit. I got to explain everything to this lady. My first time homeowners, I don't have to explain anything. They're just happy.
Yeah. Hey, Ross, real quick, I did want to kind of circle back on you and your account for a second,
Sure.
because I think it's valuable information for everyone. And it does kind of go back to, my little presentation a minute ago, and with Facebook ads, dive in a little deep for a second, is that I'm going to set up on your account, and actually Tara or Carl, any of you guys, Moshe, if you have, if there are other elements that is pretty much a immediate disqualification in your book, like being under $60,000 a year in income, we can set that up. Because of fair housing and our position, we have to pass all those leads to you guys, but we can tag them as being disqualified. And further, what we will do is when they hit that question on the survey, just like we have on the FICO survey, we can segment that audience. So if they are really a lower quality lead, they actually go to a different thank you page. And so going back to the pixel and what we're doing with Facebook, if they go to a non-good lead Facebook page, the pixel is triggered in a way to let Facebook know that was not a good lead. And then if they, however, are good leads, they will be triggered to Facebook as good lead. We are always telling Facebook to optimize for the good leads. So Facebook, as it gets that data on your account, will start to try to find that audience. So that's why in the first month, there is a little bit of training Facebook to find your audience, or we are relaunching ads and doing tests to go and help find those audiences. So that is definitely where I see there's good lead volume in your account. However, like you said, everyone is under less than 60,000. So
I figured I'd let it go. I let the algorithms. I'm brand new, so I'm in maybe 20 days into this right now. So I wasn't gonna mess with anything. And yesterday I spoke with Benjamin, and we went down and we're gonna look at different the suburbs around Phoenix. So of course people the rent level is a little bit higher. So
you're in a tough.
I'm in a tough one.
Yep.
So
It's a
it's
tough market.
just, and it is what it is. So I wasn't worried so much about that, but yeah, if I can't qualify them with the income, that is tough. I do like people that have credit problems because it does give me the opportunity to hit them multiple times over and over and over.
Yep.
But there is another thing that I do also that if you guys haven't started using it and you could look into it, I use HomeBot. It's expensive, but it's kind of awesome in the fact that you can get some more touches with some of these buyer leads that maybe aren't, going to show up, so between all the different touches that Sweps is doing, that we're doing, I have an AI in the background that sends out emails and does that too. I'm not getting a ton of conversion rate on those yet. I mean, I think I've entered like 20 of them so far, and I've had one on the buyers that's opened it. But if they do, it's like having your own personal Zillow. They're just looking at your information, and then you could tie it with your realtors. And for me, I'm doing the first time home buyer program, specifically partnering with realtors. So I've told them, hey, give me your marketing money, and I'll bring in your first time home buyers. And in between all this stuff, we'll get you, one or two, per month kind of thing. And that's kind of what I'm thinking. So this is supposed to be an automated thing for my agents to be able to give me money so I can give them pre-approvals, as they're going out. So I just tweaked it. Hopefully with the little tweaks that we have, I'll get that a little bit more of a higher income level, and we'll keep going.
Yeah, 100%. That's the right mindset, and so much of this is collecting the data so that you can make the proper decisions on what to do next. So I think we're collecting the data, and we're seeing like, okay, this is where we need to shift things. This is what things that we can do different to try and get those better results. But it definitely is a process. I love, like I said, I love it when we hit home runs and things work, but it's less and less happening like that, and there is more work that we have to do. Yeah, awesome. We'll continue to work that. Cool.
I guess I'm also interesting because I'm a national lender, so I can go everywhere. So if I need to switch up from where I am, it doesn't matter to me. I'll go find another hot market.
Chicago.
And that's definitely, it's definitely something to consider is, if you're in all 50, there's lots of other opportunities. I find, obviously, California, Arizona, Utah, Colorado, Texas are all really competitive markets compared to, the Georgias and Carolinas and Minnesota and, some of that definitely. So, some of it is like, it's great if you have that potential and you can go into different areas like that. Cool. Mr. Rottenberg, thanks for joining us. Do you have any questions? I know you're fairly new to our Sweps culture here.
Yes, I don't have any questions. I'm really new. I have to see. It's less than a month, only 20 days, like you said. I have to hope to see something goes for applications, but now still nothing goes in.
Okay. Well, we'll keep working it for you, and I'll take a look at your account and see if there's anything additional. But I know my team is on top of things there. Like I said, there's a lot of testing, a lot of things that are going on kind of under the hood there. We'll keep refining that for you guys. Cool.
Well, guys,
we're coming up on the hour here, guys. Frank, I'm sorry, I didn't mean to cut you off.
Oh, no, that's fine. I was going to say, hey, just over the next week, because we obviously do this every week, just think about any objections that you guys are facing. And then we could, if you guys are here next week, then we can talk about them. Because I like this format where we do role playing and, I answer you guys' questions because it's real world experience and not just me rambling off, good practices. It's something that you guys had these questions, we address them. So it's like, okay, now I understand I may be able to tackle it this way. And maybe my way wasn't good, or maybe your way was good, but you just find a way to take it to the next level. And I think we can all build together. Like I said, right, rising tides lift all sails. So thank you guys for your time. I appreciate you coming.
Yeah, thanks guys.
I appreciate it completely from all you guys.
Awesome. Awesome. We'll let you guys know when the replay is up. If you ever do miss any of the meetings, you know, we will make sure that they're up and so that you guys can get the info out of it.
Oh, I'll put my cell phone number in the chat just in case anybody wants to call me.
That's great.
Appreciate
Yeah.
that. Thanks.
Take them up on it. That's awesome. Thanks, Frank.
Thank you.
All right, guys, have a good one. And we'll be chatting later.
Talk to you guys.
Have a good one, guys.
Right.
Alrighty.
Thank you.
Bye, guys.
Great conversation.